The IRS announced on Tuesday that it will once again delay the implementation of a law requiring payment platforms like Venmo, PayPal, and Cash App to send tax forms called 1099-Ks to individuals who received more than $600 in the current tax year. This is the second consecutive year that the IRS has postponed the regulation, originally slated to take effect in 2021, and it will now be pushed back until 2024. The reason for the delay is to reduce confusion among taxpayers, tax professionals, and payment processors, as the IRS has received feedback from these groups expressing concerns. If the delay had not been implemented, an estimated 44 million 1099-K forms would have been sent to taxpayers for the current tax year, even if they did not owe taxes on the payments and were not expecting such a form. Instead, the IRS will continue to use the existing threshold of more than 200 transactions exceeding $20,000 in income to determine who will receive 1099-Ks in early 2024 for the current tax year's returns. In a significant revision to the law, the IRS announced that starting in tax year 2024, the reporting threshold will be increased from $600 to $5,000. This means that individuals who receive more than $5,000 in payments through platforms like PayPal in 2024 will receive the 1099-K tax form in early 2025 to complete their 2024 tax returns. The threshold will then step down to $600 for the 2025 tax year, unless further changes are made by the IRS. Aaron Collins, the National Taxpayer Advocate, expressed support for the IRS's decision to delay the implementation of the new reporting requirements, stating that it provides certainty and clarity for taxpayers and tax professionals. However, some Republican lawmakers argue that the delay is evidence that the $600 rule is confusing and unworkable, and they believe it should be scrapped and rewritten. The reporting requirement for transactions through payment apps exceeding $600 was introduced as part of the 2021 American Rescue Plan. Prior to this provision, the reporting requirement only applied to the sale of goods and services to taxpayers who received over $20,000 and had over 200 transactions. The rule faced opposition from online selling platforms like eBay and Etsy, who argued that it would create confusion and difficulties for sellers. Republican lawmakers also criticized the plan as government overreach and raised concerns about its impact on individuals who use payment apps to reimburse friends and family members. The IRS cited taxpayer confusion as one of the reasons for the delay, particularly regarding which transactions are reportable under the new law. For example, transactions between friends and family members, such as selling a couch or repaying a friend for pizza, would not be reportable. On the other hand, selling used items for a loss through platforms like eBay could generate a 1099-K, even though no tax liability would be incurred. However, sales by small businesses that generate a profit would be taxable. IRS Commissioner Danny Werfel stated that the phased-in approach is the best course of action for tax administration and will prevent unnecessary confusion. He believes that the additional delay for tax year 2023 will benefit taxpayers, tax professionals, and others involved in this area.